Think trading is a quick way to get rich? What if I told you most beginners fail before they even understand the rules of the game? There's a certain type of silence in trading no one warns you about. Not the silence of charts between sessions or a flat market, but the silence that creeps in after a string of losses, when the initial thrill has drained out of the room and you're left staring at your screen, confused, hollow, and questioning everything. That's the silence where most people quit. They don't rage quit, they don't announce it, they just quietly vanish. You won't hear about them in the forums. They won't be posting screenshots. They won't be back to try again next week. They came in with confidence, maybe even skill, but no real understanding of what this world demands from you. Because trading isn't about how many hours you study. It's about how many times you can get punched in the gut, psychologically outmaneuvered, and financially humbled, and still come back with clarity. And no, that isn't some motivational slogan. That's reality. You will be tested in ways you've never been tested. The market doesn't care if you're smart. It cares if you're disciplined. It doesn't reward effort. It rewards execution. This isn't a game of predictions. It's a war of decisions. And most don't realize they're even in a fight until they're flat on the canvas. I've been in the trenches for over a decade. Lost money I didn't have, made money I didn't expect, and nearly quit more times than I can count. I've traded through economic crashes, liquidity droughts, and irrational manias. I've seen what breaks people, and I've learned, sometimes the hard way, what builds them back stronger. This video isn't about strategies you can copy. This is about the truths you never hear, the mental pivots, brutal realizations, and uncomfortable patterns that decide whether you're still trading a year from now or just another ghost in the candlesticks. If you can sit through this, really absorb what I'm about to share, you won't just save yourself months of pain. You'll skip the part where most people fail. They tell you it's easy. They post screenshots, green days, massive spikes, triple-digit returns like it's just another Tuesday. They stand in front of rented cars, borrowed condos, fake profit dashboards. You see phrases like, "I flipped $500 into 50K," tossed around like confetti at a circus. But here's what they don't show you. They don't show the sleepless nights, the trades they didn't post, the money they lost trying to chase that one big winner again. They don't show the margin calls, the blown accounts, the private messages begging mentors for just one more setup. Social media has done something dangerous to the trading world. It's turned a business into a highlight reel. It rewards the loudest, flashiest wins and buries the quiet, steady process that real traders live by. And it's not just the influencers. It's the wave they ride. Crypto booms that turn college kids into overnight millionaires. Meme stocks pumped by anonymous message boards. Forex freedom accounts that promise luxury in 90 days if you just buy their course. The entry points are seductive. The barrier feels low. And that's the trap. See, the market doesn't care how much hype brought you in. It only cares how well you can survive once you're in. Here's a number most of them won't say out loud. Over 80% of retail traders lose money. According to data from major brokerages, only 1 in 10 will even break even after the first year. And less than 1 in 100 will stay consistently profitable after 3 years. Why? Because they treat it like a side hustle. They treat it like gambling with better graphics. They think it's about finding the next big thing when it's really about learning to do the boring things well. Profitable traders aren't magicians. They're managers. They manage risk, manage emotion, manage patience. But beginners, they skip that. They go all in on a single idea, chase momentum, ignore position sizing, and fall in love with setups that haven't even proven themselves in live markets. They confuse luck with skill. And by the time they realize the difference, the money's already gone. Let me make this clear. Trading is not a lottery. It is a business. It has costs. It requires discipline. It demands systems, structure, and a mindset that can take a punch. Until you see it that way, you're playing a game you were never meant to win. You made it past the illusion. You've realized this isn't a shortcut. It's a craft. Now comes the next phase. And it's one most people don't even recognize as a trap until it's already closed around them. You open YouTube. One video tells you swing trading is king. Another says scalping is the only way to grow a small account. Next video, option strategies. Then crypto indicators. Then someone whispering about an altcoin no one's heard of yet, but trust me, it's about to pop. Your feed becomes a battlefield of strategies. Forex, futures, indices, small caps, synthetics. Price action, volume profile, Elliott wave, order flow, supply and demand, moving averages, VWAP, RSI, Bollinger Bands, you name it. Every voice sounds confident. Every chart looks profitable. And you? You're stuck somewhere in between, scribbling notes, watching live trades you don't understand, copying entries that never work out the same way when you take them. Because what no one tells you is this: clarity isn't found by consuming more. Clarity is built through repetition of less. But beginners, they fall for the noise. They jump from strategy to strategy, hunting for the one that just clicks. They blame the method when it doesn't work in 2 weeks. They think if they just find the perfect indicator, the perfect entry, the perfect setup, it'll all start making sense. What they don't realize is that constant switching, that's the exact reason they never improve. You can't master what you don't commit to. You can't get feedback from something you keep abandoning. Every time you start over, you reset your progress to zero. You're building shallow wells, hoping one of them will strike oil. But real traders, they go deep. They pick one style, one time frame, one market, and they squeeze every drop of understanding from it. Not because it's the best, but because consistency in method creates consistency in results. That's the part the gurus leave out. They don't tell you that most of them failed for years before their edge even made sense. They don't tell you how many strategies they tried and dropped before they got tired of the noise and learned to listen to one voice, their own. Because if you're always chasing someone else's method, you're never developing your own conviction. And conviction, real, tested, battle-hardened conviction, is what keeps you from second-guessing every decision when the chart goes red. So here's the real advice they won't package into a course. Pick one market, pick one time frame, pick one strategy, and stick with it for at least 90 days. Not to get rich, but to learn, to build, to see how it works in your hands, not just theirs. Filter out the noise. Stop watching a dozen traders who disagree on everything. Find one voice you respect, ideally your future self, and give the method a real chance to teach you. Because the deeper you go, the clearer it gets. But the shallower you stay, the more confused you'll remain. You've picked a market. You've picked a strategy. You've silenced the noise, ignored the hype, and started building structure. But then, something shifts. The strategy is sound. The setup is clean. You enter the trade, and within minutes, your plan collapses. Not because the market moved against you, but because you did. You exited early. You moved your stop. You doubled down. You hesitated again. Then you watched it move exactly as planned after you bailed. This is where most people lose. Not because their strategy failed, but because they couldn't follow it under pressure. Because in the real market, not the demo, not the back test, but real money on the line, it's not about how well you analyze. It's about how well you behave. They tell you trading is technical, charts, indicators, entries, exits, but none of it matters if your emotions override your plan. FOMO, the fear of missing out, makes you chase entries you swore you wouldn't take. You see a move running and think, just this once, and that's how it starts. Greed, it whispers, let it run, even when your rules say take profit. It turns a winning trade into a break-even mess, or worse, a full loss. Fear, it keeps you from taking the trade at all. You sit frozen, paralyzed, staring at the perfect setup unfold, and you do nothing. And revenge trading, that's the most dangerous one. That's when you're bleeding and all you want is to feel in control again. So you size up, you abandon your plan, you try to win it back. But the market doesn't owe you a comeback. And when you chase it emotionally, it takes even more. Here's the truth nobody says on day one. The hardest part of trading isn't the market, it's you. You're the one who clicks the button. You're the one who changes the plan mid-trade. You're the one who adds risk when it makes no sense. You're the one who knows better and still does the opposite because you think you're logical. You think you'll be calm. But when that trade goes red, when the candle slams through your entry, when the unrealized loss ticks deeper, logic leaves the room. Adrenaline takes its place, And suddenly, you're not trading the chart anymore, you're trading your emotions. That's why people blow accounts with strategies that should work. That's why consistent profitability remains out of reach, no matter how many setups you memorize. Until you master yourself, you'll never master the market. So, what do real traders do? They build systems that protect them from themselves. They journal every trade, not just the result, but the emotion behind it. Why did I enter early? What was I feeling when I moved my stop? Over time, the patterns emerge, and they're almost always internal. They trade in simulation, not forever, but long enough to separate confidence from chaos. Sim mode lets you test execution without the emotional fog of real capital. They write rules before the trade happens: entry, stop, target, size. And once the trade's on, they follow the plan, no matter what they feel. They trade small, small enough that it doesn't hurt, small enough to stay clear-headed. Because when you remove the pressure to be perfect, you give yourself the space to actually improve. So ask yourself, are you in control of your trades? Or are your emotions driving the wheel while you watch from the back seat? Until you can answer that honestly, you're not trading, you're just reacting. You've heard the phrase before, maybe even said it yourself. Once I find the right strategy, I'll be consistent. And that is the most dangerous belief in all of trading. Because consistency doesn't come from strategy, it comes from risk control. Let that sink in. You can win 70% of your trades and still lose money. Or win only 40% and be profitable for life. The difference? Risk. Most beginners treat strategy like a holy grail. They believe there's a perfect setup that'll just click, and suddenly the losses stop. They think if they master one entry method, all their problems will vanish. But what they don't understand is that even the best setups fail. Even the best traders take losses. The difference is those losses don't destroy them, because professional traders don't focus on perfection. They focus on protection. Risk management isn't exciting. It won't get likes. It won't make a great thumbnail. But it's the reason real traders survive the storms the market throws at them. And most retail traders do not. You can have the cleanest chart, the best entry, the strongest trend. And if your risk is off, one trade can wipe out a week, a month, a year of progress. Because the market doesn't care how right you were. It only cares how much you put on the line when you were wrong. So let's break it down. No fluff. These are the rules that keep you alive. Only risk 1 to 2% of your account per trade. That means if you're trading a $5,000 account, your max loss per trade should be $50 to $100, not $500, not half your account. Just enough to stay in the game if you're wrong 5, 10, even 20 times in a row. Always use a stop loss, not a mental stop, not "I'll just watch it," a hard, defined exit that kicks you out before the trade kicks you in the teeth, because hoping is not a risk management plan. Size your positions based on volatility, not your feelings. If the asset is wild and unpredictable, you trade it smaller. If the range is tight and stable, maybe you size up, maybe. But you never let hope or frustration decide your lot size. Position sizing isn't guesswork, it's math. And math is the one thing in trading that doesn't lie to you. You want to know the real difference between a trader who lasts 1 year and one who lasts 10? It's not strategy, it's not IQ, it's not even screen time. It's how they treat risk. Because the trader who survives through the losing streaks, the black swan events, the missed trades, and unexpected news drops, that trader understands. Your career is defined by what you risk, not by how often you're right. The market doesn't reward heroes. It rewards those who respect the downside more than they chase the upside. If your risk is in check, you can take 100 small losses and still walk away profitable. But if it's not, one bad decision can erase everything. So ask yourself, are you trying to impress the market or survive it? You've studied the charts, you've managed your risk, you've followed your rules, and still the trade ends red. Then another, and then the worst one of all. The one you thought was perfect. Now what? Because this is the moment that breaks most traders. Not the first loss, but the fifth, the seventh, the string of losses that starts to feel personal. Here's something you won't hear in highlight reels. Losing streaks are part of trading, even for professionals. Even the best traders in the world go through drawdowns. Even they have weeks, sometimes months, where nothing clicks. But what makes them different isn't that they avoid losses, it's that they expect them. They prepare for them. They build their systems around them. Because they understand the truth. You can have a 60% win rate and still lose 5 times in a row. It's called probability. It's part of the game. But for the amateur, for the beginner who just faced 3 red trades back to back, logic starts to fade. Confidence erodes. Discipline wobbles. Doubt creeps in like a fog you can't shake. You start questioning everything. Is this strategy broken? Should I tweak the entry? Maybe I shouldn't have taken that setup. Maybe I'm just not good enough to do this. And then comes the real danger. You abandon the plan that was never broken to begin with. You change your system mid-streak. You reduce your edge by overreacting to short-term noise. And slowly, you stop trusting yourself. This is where real traders are forged. The ability to take a loss and not take it personally is a skill, a high-income skill. It's the skill of separating the outcome from the execution. You ask, did I follow my rules? Was the setup valid? Was my risk controlled? If the answer is yes, then it was a good trade even if it lost, because trading isn't about being right. It's about being consistent across hundreds of trades, not just 5. You don't judge your process by isolated outcomes. You judge it by how well it holds up over time. This is what separates professionals from amateurs. Pros treat losses like data. Amateurs treat losses like disasters. A professional gets stopped out and logs it. They analyze the trade. They note their emotions. They track the setup. No panic, no drama, no identity crisis. Because to a pro, a red trade isn't a threat, it's information. To an amateur, a red trade is a mirror they can't stop staring into. And that obsession with perfection is what keeps them from ever reaching it. So when the losses come, and they will come, ask yourself, are you reacting or are you learning? Because the market isn't here to confirm your ego. It's here to test your process. And if your process can't handle a losing streak, it was never a real process to begin with. This is the part most people skip, because it isn't exciting, it won't make you feel smart, and it definitely won't go viral. There's no dopamine rush here, no trade to brag about, just you, the charts, and a spreadsheet. Just you and the uncomfortable task of looking back, really looking at what you've done. And yet, this is where real traders are built. There's an overlooked truth in trading, one they don't teach in most courses or flashy Discord rooms. The boring work is what actually moves the needle, not the perfect entry, not the next signal, not even the strategy itself. What matters is how well you understand your system, how honestly you track your behavior, and how ruthlessly you evaluate your edge with data, not hope. Because that's how you stop trading emotionally. That's how you replace noise with knowledge. That's how you go from guessing to knowing. Backtesting isn't just looking at old charts. It's forensic work. It's pattern recognition under pressure. It's tracking hundreds of historical trades across months or years and asking one brutal question. Does this strategy actually have an edge? Backtesting teaches you statistical edge, how often your setup wins, how much it wins, and when it fails. Expectancy, how much you make on average per trade after wins and losses are accounted for. Historical risk, how deep the drawdowns go and whether you can survive them without flinching. You stop relying on "this feels like a good trade" and start executing based on probabilities, not emotions. Because when you've seen a setup play out 300 times, a single loss doesn't shake you. A single win doesn't excite you. You just take the trade and move on. And then there's journaling, the trader's mirror. No one likes doing it. It's tedious, it's uncomfortable, because it forces you to face something far harder than the market: yourself. Journaling reveals your patterns, where you hesitate, where you force trades out of boredom, where you get sloppy after a win or reckless after a loss. It tracks your mindset, not just your metrics. You log what you were thinking before the trade, how the trade actually played out, what you learned, what you do differently next time. Over time, a map emerges, not of the market, but of you, your strengths, your blind spots, your real tendencies under stress. That's the intel no indicator will ever give you, and that's why it's so powerful. Because here's the final truth. Backtesting gives you confidence in your system. Journaling gives you confidence in yourself. Together, they form the feedback loop that turns chaos into clarity and traders into professionals. This is what compounding skill looks like. Not just compounding capital. You test, you trade, you track, you adapt, you evolve. And while others are chasing the next shiny setup, you're refining the same one and trading it better with sharper focus and cleaner execution. That's how real edge is built. Not in one day, not in one week, but over hundreds of iterations. Quietly, patiently, relentlessly. So when someone tells you they've found the secret, ask them to show their backtest. Ask them to show their journal. Ask them to show their process. Because the traders who actually last, they don't show off their results. They show their work. You've seen the ads, the screenshots, the yacht photos, the work 30 minutes a day and make six figures from your phone dream. And here's what you were never told. Trading is not passive income. It's not freedom money. It's not a replacement for your job, unless you're prepared to work harder than you ever did at that job. This isn't a vending machine. You don't just press buttons and wait for the market to pay you. Trading is active, demanding, relentless. And if you treat it like a side hustle you can ignore when you're tired, it will punish you like a full-time job. Let's get this myth out of the way. The idea that trading is a shortcut to financial freedom. That once you learn the system, money just flows in while you sleep. But here's the truth. Trading requires effort every day. It demands presence, even when you don't feel like it. It punishes complacency, the second you think you've figured it out. People confuse trading with investing, and that's where the danger starts. Let's break it down by style. Day trading. You're in the market every single day, scanning setups, watching news catalysts, managing open trades minute by minute. And don't forget the emotional toll. The stress of being wrong, the pressure to be perfect, the mental fatigue after 3 hours of watching price move against you by a tick. If you think you can do this while half paying attention at work or on your lunch break, you're already at a disadvantage. Swing trading. It sounds easier, and in some ways it is. You're holding trades for days or weeks. You don't need to stare at charts all day, but here's what they don't say. You still need to do weekly preparation. You still need to scan charts, update levels, set alerts, manage risk. You still need a process, or your setups will vanish in the noise of market movement. This is not set it and forget it. This is set it, monitor it, journal it, and adjust when necessary. The line between investing and trading gets blurred by social media, but they are not the same game. Investing is passive. You buy great companies or assets for the long term. You're betting on time, growth, and compound interest. You check once a quarter, maybe rebalance, maybe add on dips. It's about wealth accumulation, slowly. Trading is active. You're capitalizing on short-term moves, sometimes hours, sometimes days, sometimes weeks. You need precision, timing, risk control, emotional discipline. The upside is faster. The feedback is immediate. And the price you pay for that speed is constant effort. If you want true passive income, go build a dividend portfolio. Go buy bonds. Go invest in index funds. But if you want to trade, understand, you are choosing active income. And that's what maturity in trading looks like. You stop expecting the market to hand you money. You start treating this like a business, with hours, structure, metrics, and accountability. You don't fantasize about quitting your job after one green month. You build consistency first. You prove your edge. You earn your exit. Because real traders don't just want freedom, they want control. And control only comes when you've built the habits, systems, and mindset to sustain success, whether the market is calm, chaotic, or somewhere in between. So let's drop the fantasy. Let's stop chasing easy, and let's build the kind of discipline that actually leads to financial independence. One trade, one rule, one routine at a time. Let's face it, trading can be a lonely game. And when you're working solo with just your thoughts and your screen for company, it's easy to feel disconnected. It's easy to feel isolated. But that isolation, that need for connection, can make you vulnerable. Vulnerable to the wrong advice. Vulnerable to comparison. Vulnerable to the people who will make you think you're doing it wrong just because you're not chasing the same empty hype. Here's the cold truth. Community can make or break you. The internet is flooded with communities, but they're not all built to help you. In fact, Many are designed to exploit your desperation. You've seen the forums, the Discord rooms filled with thousands of traders, all talking about the latest meme stock or crypto moonshot. They're sharing screenshots of their gains, telling you how easy it is to get rich with just one click. And then the comparison game starts. You start comparing your portfolio to theirs. You start feeling behind because you didn't catch the latest hot trade. You start thinking you're failing while everyone else seems to be on the up and up. And the worst part? Some of these people are lying. The truth? In these toxic communities, the bravado is often louder than the real strategy. The advice is often wrong, misguided, and comes from people who have no real accountability. They don't show the losses. They don't share their mistakes. They just show their wins, no matter how inflated they may be. And you fall into the trap. You chase dopamine. You forget the fundamentals. You lose sight of what really matters. But here's the flip side. The right community, the right network, can be a game changer. I'm not talking about the gurus who promise overnight riches. I'm talking about people who are grounded, people who focus on the process, not the outcome, people who hold each other accountable and understand that losing is part of the journey. A healthy community is filled with people who share their mistakes, not just their victories. They talk about their struggles, their failures, and the lessons they've learned along the way. These people aren't competing against each other. They're learning from each other. And in that environment, you can grow. You'll hear the truth, even when it stings. You'll get critical feedback, not motivational fluff. You'll gain the wisdom of others who have walked the path before you, and you'll start to avoid their mistakes instead of making your own. But here's where things get tricky. Mentorship. Mentorship is powerful when it's real, when it's grounded in truth, accountability, and a genuine desire to help you grow. A good mentor doesn't promise to make you rich. They promise to make you better. They teach you to think for yourself, to understand the market, not just follow signals, but beware. Not every mentor is actually a mentor. Some are just self-proclaimed experts looking to sell you a course or signal service. They aren't interested in your growth. They're interested in your wallet. So how do you spot a real mentor? They focus on teaching you to fish, not handing you a fish. They ask questions, not just give answers. They challenge your thinking rather than reaffirm your biases. A genuine mentor will push you to become independent. They'll teach you to think critically. They'll share their own mistakes and encourage you to do the same. And most importantly, a mentor doesn't tell you what to do. They show you how to think about what to do. So here's the final piece of advice. Surround yourself with people who align with your values. People who value discipline over dopamine. People who focus on the process, not the payout. Because when you hang out with people who are all about quick wins, you'll end up chasing quick wins. When you surround yourself with those who have a long-term mindset, guess what? You'll start thinking long-term too. Your network will either lift you up or drag you down. Make sure you're in a group that has your back for the right reasons and isn't just looking for the next big score. And as you take all this in, ask yourself, what kind of trader do you want to be? Are you in it for the flash, or are you in it for the journey? Because real success in trading doesn't happen overnight. It happens through years of learning, refining, and growing. And the right community can speed up that process, while the wrong one can derail you completely. That's the long game. That's the trader's path. And that's how you make it. If you've been trading without a plan, let me tell you this right now. You're already setting yourself up for failure. You're flying blind. No roadmap, no guide, just you, your gut, and the market. And that's the recipe for disaster. A trading plan is your blueprint. It's your rule book, your playbook, and your lifeline. Without it, your trading is nothing more than a series of impulsive decisions that you hope turn out well. And hope, as we've learned, is not a strategy. A trading plan is a set of clear rules that govern your every move in the market. It's a document you create to manage your trades and, more importantly, manage yourself. In your plan, you'll outline entries. When will you enter a trade? What criteria do you need to see before you pull the trigger? Exits. When do you cut your losses? When do you take profits? Risk. How much of your capital are you willing to risk on each trade? What's your stop loss strategy? Routine. When do you trade? When do you step away? What's your daily prep and post-trade review process? It's a roadmap to get from point A to point B, consistently, calmly, and intelligently. Without a trading plan, you're gambling. With one, you're running a business. A trading plan isn't just a nice to have, it's a must have. Here's why. It keeps emotions out. When you have a plan, there's no room for the mental chaos that comes with market movement. You've already set your entry, exit, and risk parameters. When the market moves against you, you're not emotionally reacting, you're following your plan. You cut losses when they're small, take profits when your target is hit, and stay disciplined. It enforces discipline. When you're tempted to make that impulsive trade because the market looks hot, your plan reminds you to stick to your strategy. No exceptions, no FOMO. It builds confidence. When you know exactly what to do in every situation, you make decisions with clarity, not anxiety. You don't question yourself when the market throws volatility at you. You trust the process because you've already planned for the worst. In other words, a trading plan gives you structure, direction, and consistency. It's your anchor in a stormy sea. Now let's break down the core components of your trading plan. 1. Strategy, overview. This is the heart of your plan, the rules that govern when you enter and exit trades. What kind of setups are you looking for? What time frames are you focused on? Are you a trend trader, a breakout trader, a reversal trader? Define your edge. Your strategy should clearly state what you're looking for and why. 2. Risk management rules. This is the most important part of your plan. Risk management is your lifeline. Define how much of your total capital you're willing to risk on each trade. Most professionals risk 1 to 2% of their capital per trade. What is your stop loss strategy? How much are you willing to lose before you exit a trade? This is your defense. It keeps you in the game, even during losing streaks. 3. Trade checklist. This is a series of questions you'll ask yourself before entering any trade. Is the setup in alignment with your strategy? Is the risk-reward ratio favorable? Have you checked key market conditions, e.g., news events, volatility, etc.? This checklist prevents emotional decisions and ensures you're executing with precision. No checklist, no trade. 4. Daily review process. At the end of each day or trading session, take the time to review your trades. What went well? What could have been improved? Did you stick to your plan or did you deviate? The review process is crucial for growth. You won't learn from your mistakes if you don't take the time to reflect on them. Here's the golden rule of trading. If it's not written down, it doesn't exist. This means your rules aren't just ideas you remember or think about when you're in the heat of the moment. They are concrete, actionable, and defined in writing. A trading plan is not some vague idea. It's a document, a set of rules that govern every trade you make. Without it, you're just gambling. So what are you waiting for? Write it down. If you want to be a successful trader, you need a plan. You need structure. You need discipline. And you need to stick to it, no matter what. Your trading journey is not about catching quick wins or hoping for the best. It's about building a system that works. And that system is only as strong as the plan that supports it. If you're serious about trading, take the time to craft your plan today. Don't wait for the market to teach you hard lessons. Be proactive. Write it down. Because if you fail to plan, you plan to fail. All right, we've covered a lot of ground, and now it's time to bring it all together. Let's recap some key lessons. If there's one thing I want you to remember from all of this, it's that trading is not a shortcut to fast money. It's not about finding the next hot stock or catching that one crypto moonshot. Real success in trading comes from consistent, disciplined effort. It's about playing the long game, one trade at a time, and building a strategy that aligns with your goals. Forget the hype. Forget the promises of quick riches. Focus on the process. When you're starting out, you might think that finding the perfect strategy is the key to success. But here's the truth. Risk management is the foundation. It's the difference between surviving a losing streak and blowing up your account. You can have the best strategy in the world, but if you don't manage risk, you're setting yourself up for failure. Always remember, risk strategy. Protect your capital and the profits will follow. The emotional roller coaster of trading is real. Fear, greed, FOMO, all of it. But here's the thing. Discipline will always trump emotion. When you're calm, when you're following your plan, that's when you're in control. When you're chasing the market or reacting emotionally, that's when you lose control. So focus on building that mental discipline. Make decisions based on your plan, not your feelings. If you're still here listening to this, I want to say you've already done what 90% of traders never do. You're not out there searching for the quick fix or falling for the hype. You're seeking the truth. You're taking the time to learn, to reflect, and to build a real foundation. And that's how success begins, with the right mindset and a commitment to growth. So what's next? If you found value in this video, I want you to take action. Subscribe for more educational content. Comment below and share your biggest trading insight or challenge. Let's keep this conversation going. Like this video if you believe in truth-based trading education and want to support others who are committed to real growth. Remember, trading isn't easy, but it's worth it when you do it the right way. So take these lessons to heart. Stick to your plan, risk small, learn constantly, and keep your emotions in check. You have what it takes to succeed, but it's not going to happen overnight. Stay patient, stay disciplined, and remember, this is a marathon, not a sprint. Keep pushing forward, and I'll see you in the next video.